Okay, last time we talked about elliptic curve and elliptic curve digital signature algorithm, and I want to continue along that line with a thing called Honey Badger Byzantine um, computation. And there are a couple different aspects to that. Before I actually get into it, I think I bring out some things that are currently in the news. The first one is China is officially testing its digital cryptocurrency as a national currency. This is really huge for international exchanges because the current world system for transferring money is SWIFT, and having a digital currency that you can use to transfer between countries would be tremendously advantageous, especially for people that don't want to participate in SWIFT and be regulated basically under the money laundering laws of the Southern District of New York in the United States, like, say, Iran and Russia. So having an alternative that is a nation-backed cryptocurrency that can be used for international exchange has all sorts of implications. The second one is Australia is using a blockchain solution for the registration of clinical trials. Now, I don't know if you know this, but clinical trials are subject to all sorts of problems in terms of accuracy. And this Greek researcher, Ioannis, some years ago, figured this out. At the time, he was at a university in Greece. He's not a statistician or a biologist, but he is a researcher, and he started studying the problems of finding research that has false results. And one of the ways you could do that is if you want to show that there is a zero point 0.5 sigma in a research, an alpha of 0.5, and you want to publish your research, you are heavily incentivized as a researcher to find something that shows a result, not to find something that shows no result. So a lot of research gets published where people find results that show something is happening. Now, if it's 0.5, you have a 1 in 20 chance of finding a result, just by random chance. That's what that 0.05 means, or a sigma of 0.05. Okay? Actually, an alpha of 0.05. Excuse me for saying sigma. An alpha of 0.05. So if you have this 0.05, you have a 1 in 20 chance. Now, if you go and collect some expensive data, and let's say we look at 10 different things in this expensive research data collection process, and you go poking through them, and you say, by golly, let's find all the ones that satisfy this criteria. Now, since I have 10 things I looked at, and I have a chance of 1 in 20, then I have a 50-50 chance of finding something in every piece of data if I look at it as a alpha of 0.05. If you were to do this correctly, looking at 10 things, you want to take your alpha and divide by the number of things you're looking at so that you eliminate this bias. And this happens all the time where these things get done this way. Now, one way to prevent this is to have a registration. And the registration is basically a statement that I am looking for thing X. Thing X is one of those 10. So I may collect 10 different pieces of data, but by golly, what I'm looking for is X. And either X is shown or not shown, so it maintains the probability. So this hijacking of the system allows you to go out and instead of doing real research, find something and publish it. Now, how expensive is this? Some years ago, there was a set of 57 different studies that were considered gold standard studies that a biotech company was using for the development of cancer drugs. And this was when Dr. Ioannis first published his results, that there were a lot of studies out there that had bad statistics, bad results. And he went out there and, published this. He actually became fairly famous in some research circles for doing this, and has now got a permanent placement at a prestigious U.S. university for doing this, basically to continue his research. But this drug company went, you know what, we should go back and we should replicate these studies. Out of the 57 top-rated studies, they could reproduce 13. And not all of the reproductions showed that they were successful. Only 6 showed that they actually got the results that were published in the first study. So they got about 10%. And since every one of those drug trials that they were doing was going to cost them around $100 million, finding the 6 that actually could be reproduced and shown to be successful, we're talking a lot of money saved. So Australia has started using a blockchain solution for this. The reason they're using a blockchain is they want the registration to be provably before the research starts and not after, because if you register that I'm looking for X after you've already found X, it doesn't mean much. So this is another kind of a time-based registration system. And I think a lot of people and countries are going to go in this direction for registering research. They are requiring this registration now for everyone that does any government-funded research in Australia. And to get the funding, you have to demonstrate that you've already pre-registered on this blockchain. Now, the registration on the blockchain basically uses a contract like the one we developed for homework. It's not really any more complicated than that. You actually publish your registration details on a public site, but the document that you use to register, you actually have to submit it, and this document gets a hash that is put on the Ethereum chain. So literally, it is very much like the homework that we did for this. Those are the 2 things that grab me that are in the news. Another one that is in the news is not so much in the news, but happening to all of us. We had this nice multi-trillion-dollar stimulus package, I think $2 trillion that our government produced. And, you know, the way they're doing that, since they haven't raised taxes, is they're borrowing money. Now, if they can continue to borrow and interest rates stay low, everything is good. But if interest rates start to creep up, we're spending $1 out of every $9 of our income tax on interest now. If interest rates double, that's going to go to 2 out of every 9. And at some point, the government, the United States government, is only choice will be to just create more money out of thin air. Now, as soon as you talk things like quantitative easing, which they're now doing to help support the economy, and we have a 3rd and a 4th stimulus, and they keep spending money, what they're doing is they're increasing the supply of money. Now, from an economic perspective, if you increase the supply, okay, the price goes down. And this is true of money as well. When you see other countries like Venezuela who have dramatically increased their supply of money, the price goes down, and we call that inflation. So I would assume that we are headed for a period of inflation in the United States. Either that, or we're going to have drastic tax increases to cover the money we're spending now. And that's probably not too palatable either. So inflation is probably coming in a big, bad way. Now, I'm old enough that I survived the 18 to 22% inflation in the early 80s. It was really ugly. But in the United States, you can look back at that and you can say which kind of things are inflation-proof and see that, yes, things like investing in stocks or real estate is pretty much inflation-proof. If you took out the inflation and you look in real dollars, companies that did well when there was inflation, with rare exceptions, and companies that did poorly. And that's in constant dollars without the inflation. So our money supply is a commodity. Now, there are other commodities out there that don't get expanded by governments, like gold and Bitcoin and Ethereum, that are probably not going to be subject to this. So if you're looking at things that would be stable over this time period, cryptocurrencies are probably not going to be, they're going to have their spikes up and down from outside influences. But over a longer haul, they don't have this expansion. In fact, Bitcoin is going through a halving, which means that the number of rewards that go out to miners decreases. And that halving also means there is less new input supply of Bitcoins. And when there is less supply, the price goes up. So we've seen a big spike recently in the past month where the price of a Bitcoin went way down, but now it is higher than it was 6 weeks ago. And I would expect to see that it will continue to rise, and this isn't some kind of oh, go buy Bitcoin and invest your money promo here. That's up to you. Okay. But my anticipation would be that these things would continue to increase relative to things like a dollar because the value of the dollar will go down. And that's inflation. It's not that the Bitcoin went up, because if you went to buy some other hard asset with it, that's probably going to be about the same. But it's going to be that our increasing supply of dollars is going to drive down the price of a dollar when the value of the Bitcoin will be consistent. So I think those things are coming. I would be really, really surprised to see if that doesn't happen. Now, in combination with that, when you look at China testing a cryptocurrency, some of the value of the US dollar comes from the fact that it is been a stable currency around the world and used for international exchange. So the dollar is also going to be under pressure from having a competitor that is also a stable currency that is used for international exchange. So you'll be able to buy your, say, Saudi Arabia oil instead of in dollars. Perhaps you'll be able to buy it in Chinese cryptocurrency. And that will have a dramatic negative effect on the value of the dollar, also driving it down.